Hello, welcome once again to our podcast. My name is SeeWing Yee from the Yee Real Estate Network. We are we're based out of San Francisco Bay Area. For the past 20 years, I've been helping turnkey cash flow investors mainly from California to buy out-of-state turnkey cash flow properties in the fastest growing market in the country. Been doing it for a very, very long time. And my special guest, once again, is Mr. Richard Advani, who is a loan consultant with Supreme Lending. He does investment financing loans for investors in all 50 states. He's physically based out of Southern California, and he also does owner-occupied lending for buyers, and with respect to California, buyers occupy mostly jumbo loans. So we kind of discussed that. So before we go any further, I want to kind of share with you my personal and business goals for 2022 as we're starting the year. So my personal goal will be, I will continue to to work smart, work hard, so my wife and I can travel extensively. We've been traveling very consistently over many years. We have visited more than 50 countries already in our lifetime. We're gonna have at least 50 countries more. So spend a lot of time traveling. In order for us to do that, I listen to other very highly successful entrepreneurs in different industries, not just real estate. And the theme I hear is that you need to work smart, you need to delegate, you need to, you need to delegate, you need to scale your investments and have a team surround you so you don't have to work hard. Again, that's my personal goals. And to travel a lot more, and takes a lot of money to travel, as you know, because we do a lot of cruising, a lot of travels all over the world over the years. And so in order for us to sustain those lives, we need to continue to build my business. So speaking of my business goals, it's just that I plan to have increased my business more than 100% from the previous year. And the reason why is that real estate has been doing very well. I've been consulting and coaching and able to produce the right product for our investors in a great markets. And we have many, many customers. So I'm very, very pumped, very, very excited, very passionate about helping real estate investors to achieve their goals. And so it's such a tremendous ride. I'm so happy. I'm so excited. So Richard Advani, I know you are already one of the top 1% of investment loan agent in the country. I mean, what is your personal resolution? What is your business goal for 2022?
Absolutely, yeah. I would say my goals are probably pretty similar to yours, right? Most people think we're nuts for saying we want to grow our business dramatically, and we also want to free up more time personally. That way we can spend them with our significant others. But yeah, I mean, last year we moved over to Supreme Lending after, 8+ years at Wells Fargo. So that came with the shared challenges. But now that those challenges are behind us, my goal is to continue to capitalize not only in the real estate investment community, but also in the primary home and luxury market here locally. And then personally, I'm kind of there with you. I love traveling. This past year with COVID, as well as, kind of rejuvenating our business at a new funding source. Didn't get to do much of that. But, also is to set up the right systems and the right staff to where, I own my time a little more versus my time owning me, which it has this past year. But that was a calculated decision. So, not complaining, but definitely ready for that next stage. So, increase production work-wise, and then also increase quality time personally. So lofty goals, but they're definitely attainable. And I'm sure by this time next year, we'll be looking back, both of us, and hopefully having traveled a lot more and also grown our business.
Yep, absolutely. And didn't the kind of the personal and business goals that you and I just articulated are really in a way are no different than any other individuals out there, especially the real estate investors out there. You know, you and I, right, we have a very close relationship with our existing motivated real estate investors. They tell me the same thing. They want to scale their portfolio. They want to buy more properties. They want to use the tremendous mortgage, low interest rate environment to finance all the mortgages, all the investment properties. And some of them already have 10 Fannie Mae mortgages. You and I will discuss more about that later on this episode. So yeah, so very good. So as long as you are very ambitious, very motivated, very committed to your goals, you can make it happen regardless of what's going on out there. So without further ado, let's spend the next 5 minutes from a high level. I know we spoke about it before. For the next 5 minutes, just go over the real estate market and quickly. So my quick thought is that I've been talking to a lot of my close friends that I cultivated over the years. My real estate friends in San Francisco Bay Area, in which I spent more than 30 years living here in the San Francisco Bay Area. And you likewise, Richard. I mean, you're in Southern California. And the place that we physically live is one of the most expensive real estate in a country. It is amazing. Anyway, and of course, I spend time talking with my network market realtors that that we're working with as well in those markets. And also I watch YouTube videos, I watch experts commentary as well about real estate. And clearly my takeaway is for the year 2022 will continue to be a very challenging market. There's really almost no inventory because just lowest inventory in history, and the interest rate is still at a very historical low. Which we will talk about a little bit today, and tremendous demand, continued demand. So here in the Bay Area, and just give you a personal thing, my son is trying to buy a single family home in Oakland. Now, some of you don't know about Oakland, but historically speaking, Oakland is it's kind of a rough neighborhood in over the years, but now he has improved, and yet, it's not just my son is a millennial. I mean, millennial is really the main driver of real estate purchases these days, and he's trying to buy a home, single family home in Oakland, in a better part, in a C plus B minus neighborhood for like $850,000 budget, and he's able to get like 2-bedroom, 1 bath, like 1,100 square foot, built in 1920, 100 years ago. And for $850K, for example, and over the past 6 months, he got outbid on those type of homes in Oakland, and the bidding typically like 10 offers. I mean, this past fourth quarter, from September to December 2021, typically is a seasonal real estate activity, meaning less people are in the market due to the holidays, whatever, and yet. I know every market is different, every neighborhood is different in every part of the country, but he's getting outbid. I mean, people bidding on these homes like 10, 15 offers a few months ago. I mean, the winning offer is like $1.2 million, the winning offer on the bidding war here in Oakland. And typically, more often than not, it's an all cash offer. I mean, on a rinky-dink cookie cutter, ugly looking 1,100 square foot, 2-bedroom, 1 bath house in Oakland. I mean, just one example of how crazy the real estate market is, not just in the San Francisco Bay Area or Southern California, but all over the country. So the tremendous demand and extremely low supply, we expect to have continual appreciation if the interest rate is low. So anyway, let's go over my market. My investment real estate market, right? People know that we have turnkey approach where we have identified, we have done all the research in all the markets, and we offer off market, not in a multiple listing service, specifically for investors, turnkey investors with property management, whatever. So let's go over my 6 market. So let's go over all the challenges. And by the way, Richard Advani over the years have assisted our investors to get investment loan financing with all these markets over the years. So he understands, where I'm coming from. So let's go over even my Buffalo, Niagara Falls market. We have, very old properties, that's fine, very high cash flow, selling for 100 grand or less, a single family home, duplex, fourplex, selling for 100,000 or less, which is amazing. And then there's a lot of demands also, not enough inventory in this. And then Alabama, we have a market. We have a team in Alabama and Tennessee. They sell older resale homes, $100,000 to $150,000, and they have new construction for $250K in various parts of Alabama coming up, especially this year. And again. We sell to investors, but there's not enough of these homes available. So all the market we're presenting, you okay, Richard? Anyway, I mean, these all market opportunities. I mean, once the inventory comes available, they get sold quickly by investors. So and then similar, the new construction we have in Raleigh and Charlotte, North Carolina, selling for $300, $350K. The new construction we have in Central Florida and Southwest Florida selling for $250, $350K, and also in Central Texas in the Austin submarket, in San Antonio submarket, we have new construction selling for single family homes selling for $250K to $300. The theme is, investors from my network, you have to be on a wait list. You have to be on a priority wait list. For the inventory to become available. So it's very, very challenging. So you have to be very, very patient because our network markets are trying to bring more inventory, but it's very, very hard. The ratio, let's go with this. If you're going to buy in the Midwest, is a cash flow market. In the Midwest, Buffalo, Niagara Falls, right? It's a 1% rule. 1% multiplied by the purchase price equals the gross monthly rent equal to cash flow with financing, 20 to 25% down payment. So in the higher price point in South and Southeast, North Carolina, in Central Florida, Southwest Florida, Central Texas, the rent to value ratio is like 0.007. Just remember that, right? So you're going to buy a $250,000 new construction, multiplied by 0.007, and that is a gross monthly rate or whatever it is, $1,750. That numerical formula will allow you to achieve positive cash flow on the financing aspect of it. So 20 to 25% down payment. So that is that's a threshold. So with that in mind, Richard Advani, you are a very important cog of our team. So when our investors do a financing for single family home on the price we just discussed, with the rental price ratio 0.007 on those new builds and 1% on those Midwest older homes, high cash flow properties. What are the typical rate for investors that want to buy a single family home around $300K or less, single family home rentals with 720 FICO score with full doc. So what is the interest rate for investment loans on this single family home product at this point?
Oh, can you hear me?
Yes, I can hear it.
Okay, beautiful. Yeah, so good question. So one thing to note is, interest rates, unfortunately, this year so far, so this week, have gone up pretty sharply. Mortgage rates are loosely based on the 10-year Treasury bond. Those of you sitting at home, if you have a smartphone, if you have an iPhone, in the stock section, if you type in TNX, you'll pull up the graph of that Treasury bond. And on Monday, it went up almost 8%. So pretty sharply. It went up 3% yesterday. So along with that, rates are up 0.25% probably from last week. Now, historically, they're still extremely low on a single family home with 20% down. You can still get into the high threes, low fours. 25% down keeps you in the high threes. Now, keep in mind, prior to the pandemic, primary home rates were in the high threes. So rates have been historically low the last 7 or 8 years. And the last year and a half, they've been mind-blowingly historically low. And the general consensus is rates will increase probably a little more through the middle of the year. But even if investor rates get to the low to mid 4% range, that still is, I keep saying historically, because who cares about historically, but that's still an amazing rate on a rental. Most of my career, primary homes have been in the low to mid 4s and rentals in the high 4s, maybe low 5s. So, given that our potential worst case scenario for this year is them pushing up to the prior all-time lows, we still don't have tons to worry about. It's still a great hedge against inflation in the long run. And overall, keep in mind a 30-year fix is a beautiful, beautiful thing. God knows what the true inflation numbers are today, right now. The government's is anywhere to 8%, 12%, 5%. It's probably, I don't know, probably closer to 10 to 15% in the last 2 or 3 years. And, that's where you really see the beauty of that 30-year fix, because as the cost of bread goes up, gas goes up, rent goes up, guess what doesn't? Your 30-year fixed mortgage payment. So, now's as good a time as any. And then what most people also don't realize, and forgive me, I'm losing my voice here, is the return on amortization, right? You're paying down your balance every single month. And the longer you have that property, the more that you start paying your balance down, with each payment. So you're building wealth on the back end as well. Real estate's not a get rich quick type of investment. It is a build wealth over time type of investment. And there's no better way to do that than a 30-year fix. I mean, it's cheat code essentially.
Yeah, my another definition that I kind of stole from another real estate expert out there. He called investment loan mortgages are inflation-induced debt destruction. Think about that for a moment, in a good way. So, yeah, I mean, it's a powerful. I mean, the ability to get financing, the ability to have good credit, to do a full-out loan with the Fannie Mae lending guideline is amazing. I mean, borrowing cheap money to leverage your investment literally in double your return on investment 10x over time. So, all right. So one more thing is that, all right. Some of my investors, by the way, you might acknowledge, they have purchased a lot of houses for my network in the past couple of years, and they are reaching the threshold of 10 mortgages, 10 Fannie Mae investment mortgages per person, assuming their spouse are not willing to do the next 10. What are their, I mean, if the investor who still want to buy single family homes, I mean, what are their strategies? What are their options? Before we go there, okay, let's talk about. We also promote, my network also promote duplex up to fourplex. Anything beyond fourplex is commercial. My network, is not my business model. This commercial investing is another realm. But from 2 to 4 unit, the 2-unit new construction duplex probably will cost like $450,000 in the market that I'm promoting, and a fourplex typically around $700,000 to $850,000 new construction in a good market that cash flow with 5% cap rate. So 2 to 4 units for our investors. What are the interest rates associated with those purchases?
So, as these conforming rates continue to increase, the gap between the conforming rates and these non-traditional over 10 finance rates is really getting smaller and smaller. Right now, 20% down on these over 10 finance programs that you can actually also use to obtain a loan to an LLC are around that 4.5, 4.625% range on a 30-year fix. So, mid 4s, 30-year fix. Most of the time, there's no income documentation on them as well if you own a primary home. So, it's the product's been very, very popular the last year, and it's getting increasingly popular as the gap between those conventional and non-conventional loans continues to get smaller. But yeah, it's a huge tool. I mean, that door which was once closed when you exceed 10 finance properties, is now wide open.
Well, so what I hear you saying is that investors that max out on the 10 Fannie Mae mortgages, if they want to continue to buy single family homes, 1 to 4 unit in good areas, new construction, whatever, even those non-Fannie Mae, they can still get a 30-year amortized rate. They can still get a rate of around 4.5% currently. And as long as they put a mere no-doc loan on a 20% down payment, or 25% if they can buy a multi-unit, as long as they have a primary home, as long as they have, so they don't need a W-2, or for the people that are retired, does not have a W-2, but they fit under this criteria, they can do these kind of loans still, right?
Absolutely. Yep. If you own a primary home, you don't even state income, your income amount on the application. So pretty impressive.
Oh yeah, that's a great product. I mean, years past we do not have these kind of good loan products. So I want to make another distinction. Okay, the investor's strategy is very different than owner-occupied home buyers. Meaning, the difference between 3% interest rate on a mortgage versus 4% interest rate on a mortgage for a owner-occupied home buyers who's buying a $500,000 to $1 million home for financing. The slight higher rate will make the monthly mortgage payments very, very, very high, to a point where the affordability issue will come into play. But investors, at least investors that I work with and you work with as well, we're getting financing on homes in the Midwest. It's only 50 grand or 60,000 or $100,000 in the Midwest, and in the South and Southeast, new construction, newer resales, 250, 350K. The difference between 3 to 4% on a lower purchase price home on the financing aspect is really not that relevant. It's not a deal breaker, because investors look at cash flow. They look at the rent to value ratio, as we alluded to. So would you agree that my assessment is basically true?
Yeah, definitely. I mean, once you push down to 150K, 120K and lower, I mean, 0.25%, 0.5% makes a marginal difference to your payment. And more importantly, those are higher cash flow properties as well. So it makes a really marginal difference to your return on investment as well.
Yeah. Okay. So I think we're almost concluding our presentation. My takeaway, once again, let's take a step back to go over the 2022 real estate market. Again, my takeaway is that as long as the interest rate is less than 4%, as long as, because the builders are not building new homes fast enough throughout the country because of the supply chain disruption, the higher cost of construction with lumber, with all the things inside the house, skyrocketing costs, the delays in getting permitting, the delay in construction because of labor shortages and supply chain disruption. So new builds are taking too long to get built. There's not enough of them to impact the inventory of supplies for the foreseeable future. And in terms of resale, with this Omicron, I don't know, that may prevent any seller out there that ordinarily might want to put their house on sale in this year. They may delay the process, and would continue low inventory, like 1 month supply of inventory in most markets in the U.S. I predict, we can have a robust realistic market opportunity continue similar to 2021. I mean, not 30 to 50% appreciation like we see in Austin, Texas area in the year 2020 or early part of 2021, but still a good amount of appreciation because of almost no inventory everybody tells me almost still no inventory starting right now, very little inventory, less than 1 month supply, whereas 6 month supply is the normal market. We're not going to reach normal market anytime soon. So my takeaway is investors, we keep saying this, right? Pull the trigger, lock in your price now, invest for the long term. get the great cash flow. The rent has increased dramatically. This rental acceleration is historical. There's not enough homes to buy. There's not enough homes to rent. So investors getting their houses rented so easily, so quickly. They're able to raise the rent also consistently. So cash flow will continue to occur if you buy in a good market, in a market that we're in south and southeast of the United States mainly. So right now is the best time for investors. Low vacancy rate, low maintenance, great tenants who are willing to you could increase the rent dramatically. Good cash flow, so a long-term play, good appreciation potential. So things are looking good for my perspective. So with the remaining 30 seconds we have, so what is your takeaway from what has happened in the past couple of years during the pandemic, and then moving forward the year 2022, especially for investors that want to buy cash flow properties? What are your thoughts, big picture?
Yeah, it's kind of ironic, right? I think we were all, as investors, so scared moving into the pandemic, right? We had, you turn on the news, government's telling people not to make their rent payments, right away. I'm like, oh my God, what's going to happen to all of us that have a couple dozen rental properties? And then, of course, they gave forbearance options, and everyone was like, the real estate market potentially is going to crash. And it's amazing because the opposite happened, right? Who would have thought? Out of my portfolio of a couple dozen rentals, I didn't have one person not make their mortgage payments. And it's weird because you listen to the news and you hear all these people not making their rent and all that. But I mean, I feel like most of the investors I spoke to, if not all of them, had very, very minimal impact of people not paying, their rents and stuff. And then, thinking that, okay, well, that's going to cause the market to turn around a little, or COVID and values to go down. The opposite happened. I mean, we've been on such a rally, such a COVID rally with housing that it's insanity. I mean, house values have gone up 15, 20, 30% in the last couple of years during COVID. Rents have gone up as well, and they expect rents to go up even further this year. It's really crazy what's happened. Once again, the opposite of what all of us thought was going to happen. So, it's been an exceptional couple of years. I think the demand and supply problem is not going to get fixed anytime soon, right? We need way more homes than we're building nationally right now. And there's more and more people on this earth every day. People are living longer. That's not going to change, So I'm very pro real estate market, and I'm looking forward to picking up more properties this year, and that way, taking part of the long-term growth. People need to get away from what's happening in the next year, 2 years, but look at a decade from now, and what is that real estate investment going to do for you a decade from now?
Yeah, absolutely, Richard. Absolutely, I have similar sentiment. For our investors, the first step is to get loan pre-approval through you, hopefully, right? I mean, get the pre-approval of the loan, then consult with me secondarily, so I can get to know my investors better. Then identify the market we have available, and then touch bases with our network market, wherever it is, Alabama, and Buffalo, Niagara Falls, or Southwest Florida, Central Florida, or North Carolina, or Central Texas. Consult with our network realtors in those markets, our team, and just put yourself on a wait list, priority wait list, because even we sell off-market properties in all markets, not in a multiple listing service. You don't have to deal with the bidding war with the general public, but we don't have enough inventory, right? I mean, available for all investors. So you have to be motivated. You have to be patient. You have to also you consult with me, do loan approval with you, and then go to the market that you want to buy with our network realtors. Consult with them. They put you on their wait list, priority wait list. When the inventory comes available any given time during the week, you need to pull the trigger quickly, because those inventory, they'll come available within few hours and they're gone, because for every one investment property we have available from any of our market providers, we have at least 5 to 10 investors, not only from my investment club, from other investment club, also targeting the same available inventory that are available every single week. So got to focus, and then that's the protocol. That's how it is done. I did not create this frenzy. That is how the market is. It is right now. But if you have motivation, if you have the commitment, you can do it. Just take action, be disciplined, be patient, and have a positive attitude. And you will, as investors, as anybody, everything what you want in life is on the other side of fear, right? With that said, thank you so much, Mr. Richard Advani from Supreme Lending. We already have your contact information on my YouTube content, so people know how to reach out to you. Thank you for co-presenting with me. This is SeeWing Yee from Yee Real Estate Network. Thank you so much for listening. Have a nice day. Thank you. Bye-bye.